It may be time to go discount shipping for quality stocks at low prices. Higher for longer interest rates make it a good time to look for blue chip stocks at a low price. Bristol Myers Squibb. Even faced with upcoming biosimilar competition, Bristol Myers Squibb stock is trading at a significant discount. Pfizer. Analysts seem to be slowly warming up to Pfizer's growth prospects. Alcoa. Rising aluminum prices will help Alcoa stock continue to bounce off the base it formed in 2023. Let's dive in. Here are the 3 blue chip stocks to buy at a 52-week low in February. Welcome to Timely Investment Research. It's tough to make the argument that stocks are cheap, but it's still possible to find some value. You can even find some blue chip stocks at a low price. Blue chip stocks are known for consistency above all else. They're frequently thought of as sleep well at night stocks because they provide predictable revenue and earnings. They also frequently pay among the best dividends in terms of yield. But even blue chip stocks can underperform. And when that underperformance coincides with monetary policy that includes higher for longer interest rates, they can start trading at a discount to their historical averages and to their sectors. Here are 3 examples of blue chip stocks at a low price that are available to value-oriented investors. Number 1. Bristol Myers Squibb. Bristol Myers Squibb continues to trade near its 52-week low despite beating analysts' estimates on the top and bottom line in the company's most recent earnings report in February. The company reported better than expected results from its 2 flagship drugs, Eliquis, marketed with Pfizer, and Opdivo. In the case of a biopharmaceutical company, your stars have to be your stars. That was the case as Eliquis and Opdivo posted approximately 7% and 8% year-over-year revenue gains, respectively, while the company as a whole only posted a year-over-year gain of approximately 1%. This is where analysts have problems. Some believe that Bristol Myers won't be able to get new drugs launched before Eliquis begins facing biosimilar competition. That's a fair concern. But at 12x current earnings and 6x forward earnings, Bristol Myers Squibb stock is trading at a discount to its historical average and the sector as a whole. Add in a growing dividend with a yield of around 5%, and you have the formula for a stock that is undervalued and ready to move higher. Number 2. Pfizer. The fall of Pfizer's stock is not without merit. The company was one of the biggest winners after its COVID-19 vaccine that it developed with BioNTech sent revenue and earnings soaring. It's been the normalizing of that demand that has caused analysts to reject the stock. But as we have said for months, Pfizer stock looks extremely undervalued. The company has approximately a dozen drugs and therapeutics that should be approved in the next 18 months. And the company's existing Prevnar 13 and Prevnar 20 drugs are showing strong year-over-year growth. Plus, with Pfizer stock trading at just 12x forward earnings and offering a dividend that yields 6.1%, analysts are starting to bid the stock higher. The median estimate of $13.21 is 13.4% higher than the current Pfizer stock price. Number 3. Alcoa. Alcoa looks to have formed a bottom in late 2023. Since then, you can't necessarily say what's happening with the stock is a recovery, but it is starting to form a pattern of higher lows that makes it a solid choice among blue chip stocks at a low price. The fundamental case for Alcoa stock is that aluminum prices are expected to rise in 2024. That growth will only be in the low single digits. However, earnings are a more bullish story. Alcoa is projecting a 353% increase in earnings in the next 12 months. Still, the stock won't be anywhere near the all-time high it reached in 2022. Considering that Alcoa stock is down 48% in the last 12 months, investors will take whatever they can get. The rally in aluminum could be stalled if demand in China doesn't increase. But for now, analysts seem to be encouraged by Alcoa stock. They're starting to raise their price targets even if the stock isn't a full-throated buy. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.